Welcome back from a Labor Day holiday, all. Ira Epstein with your morning flash update, and this is for Tuesday, the 3rd of September, 2019, about 9:35 in the morning. Getting ourselves all set up, pouring in Chicago, a lot of rain coming down. As you can see in the market, energy markets getting hit, and the reason they're getting hit is you're starting to get economic data, be it Japan, Korea, the U.S., and you're seeing that slowdown in economic activity. China, well, they saw the U.S. go ahead with its next round of tariffs, and now the question is, will there even be a meeting between China and the U.S. face-to-face this month? We still don't know. You're up a little bit in the nat gas because as that Hurricane Dorian is moving around the East Coast. And by the way, it did not make its run into the Gulf of Mexico, which added bearishness here. Plus, we saw that the Saudis picked up oil production a little bit, as did the Russians in the July numbers. That just weighed on it. So you were down hard on Friday, and then you come in today without the damage from the hurricane, away you go. In my newsletter, I think it was Wednesday, I said, you know, predicting these storms is as much an art as a science. I think that was proven rather true. In the stock market, it doesn't do any good to see all this slowing down, right? And September is notorious. It's a choppy month. A lot of downside can happen early on in September. Metal markets exploding, and you're getting the classic bull sign of silver and gold running together. Very, very bullish scenario. Copper, hey, the biggest user in the world is going to see a problem. And if they don't get along with the U.S. and this just keeps dragging on, why should copper hold up? As we take a look at other of the different markets, remember, we're back to September 3rd. Parliament is meeting in the UK. Boris Johnson's holding the line. Can he be, if you will, pushed enough to call for a snap election? Is he still going to be pushing? And I know the man is saying he's going for Brexit with or without a deal on October 31st. How do you stop him? A lot of rain, as I'm saying. We're hearing the thunder behind us in Chicago. You can see how this market's come down. Bitcoin, big jump today. And bonds and notes roaring. Why? Well, economic data. Here is the U.S. ISM manufacturing headline recap. I want you to look at this. This is a contraction number. Any reading under 50 is contraction. So they expected 51 in the index. They got 49.1. Well, prices went up a little bit. All the other numbers are weakening, as you can see, and weakening smartly. A lot of contraction going on here. Construction spending didn't make it. Up a tenth. They expected up 0.3. Admittedly, they did revise June from a negative 1.3% to just down 0.7. Then market groups, and let me just step back here so you can see it. Manufacturing PMI came in at 50.3. Now that was an improvement over the August early prelim of 49.9. Bank of Canada is expected to hold interest rates steady tomorrow at their monetary policy meeting. This coming Friday, we're already looking for about 154,000 jobs, holding the unemployment rate steady at 3.7%. It doesn't help, and helped gold, as Argentina, of course, puts on what? Capital controls. Their peso goes tumbling. They had 3 interventions Friday that I watched. I saw them spending upwards of $3 billion US dollars, money they sorely need. They couldn't keep that currency going, is supporting it. In the yuan, the market's now at 7.2. So yes, China's allowing it to continue, if you will, the fall in value to offset some of these tariffs. They're doing it in a graduated way, but that's an 11-year low. The Eurozone July PPI came in up 0.2 on the month, up 0.2 on the year, nothing big there. The Reserve Bank of Australia today left its key interest rate unchanged at 1% and opened the door. They said if employment numbers slip, they may have to take what's left at 1% and start moving. There's a theme here. There's not a lot of ammunition that a lot of central banks have without going negative, and we've already got a lot of negative interest rates, and those economies aren't doing well. Japan reported today the capital spending by the country's manufacturers fell 6.9% in April to June timeframe. That's the first decline there in 2 years. And as I said, the hurricane, as it's moving along the East Coast, behind it, it's dragging warm weather with it, and that's putting up the natural gas at this point in time. And that's why you see these energies down. This particular one is up as time goes on. So are we in a volatile period? Yep. Are we looking at soft economies? We are. Are we looking at the potential for not even having a U.S. face-to-face meeting with China? I'll flip the coin on that. Don't have the slightest idea. One of the things I do have an idea on is where markets might go once they start into a move, like gold and silver are. Where could these price counts carry the market? We do a couple of things. I want you to think of Fibonacci with swing lines tied in, giving you an idea of the setup where a price might go, and you get up to 5 counts. Now, typically, the first count is the highest probability one of being hit. Then they fall in the probability, and each time you get to a number, it's very, very common to get a bit of a stall. How do you learn about this? How do you get this? Well, the chart of the day will be sent to you by email. That's number one. How you learn about it, you give us a call or you go to our website, sign up for our free offers. They'll be right there. You'll see chart of the day. We'll make certain you get everything you need to learn about this and work with it. You can also click up here if you're watching me on YouTube. It'll take you right there. With that, I'm Ira Epstein. You have a good morning, and I'll see you this afternoon in the end of the day videos. Take care now.